Welcome back, everyone. Today on the Joseph Carlson Show, we're going to be taking a look at how things went in 2024. It's been a crazy year. 2024 has been jam-packed, very busy year, and we're getting now to Christmas break. I'm going to be taking some time off soon, so I want to just take a look at how things went. What happened in 2024? Which companies did the best? Which did the worst? How did the portfolios, the story fund and the passive income portfolio perform overall? We're going to be taking a look at both the granular level on a company basis as well as overall, and kind of look at how things stacked up against the index. We'll also be looking at the YouTube channel. This is, of course, a business. I run 2 YouTube channels, and there's a lot that goes on with them. I'm going to give you an inside look into what I'm looking at, all the analytics, the metrics, the growth, the subscribers, whether or not things are trending in a good direction or bad direction. And we'll even be looking at the Patreon, the membership growth, and what we're doing with Qualtrim and different business developments. So you'll be getting overall an inside view into all the type of things I track, both for my YouTube business and for my investments. Now let's go ahead and get started. We'll start off with the passive income portfolio. That's the bigger of the two. This is my main portfolio that I've been tracking the longest. And this year has overall been okay for it. It hasn't been amazing, and it also hasn't been bad. And the reason that I say that is because this year so far, it's closely tracked the index. In fact, it's been very close to matching the S&P 500. Now that's a divergence from the past 2 years. Over the past 2 years, this portfolio has beat the index. In fact, in 2022, we beat it by 2%. We went down a little bit less. In 2023, it beat it by 7%. We had 32% performance compared to 25.8. And then so far this year, like I said, it's basically in line. When I look at the year-to-date performance right now, it bounces around a couple percentage points. It'll go up and down. Right now, it's at 24.5%. The index right now is around 25%, so they're very close to each other. But overall, that's an okay thing. If I break down the performance contributors, this portfolio has earned $7,379 in dividends. So just over $7,000 in dividends paid, and then it's also earned $156,000 in market gains. So the huge majority of this, of course, is coming from the market gains. When you have any type of portfolio like this, most of my companies are compounders. They're ones that are growing their intrinsic value. A lot of their value is derived from buybacks, not dividends. So even though a lot of it comes from dividends, we have 7,000, a huge portion of it is from multiple expansion, earnings growth, and buybacks. So overall this year, the passive income portfolio has performed mostly in line with the stock market. Now, when we look at it on an individual basis and we break this down company by company, I can look at this on Qualtrim using the watch list feature. All these companies on the left here are in the passive income portfolio. So this whole list is each holding that I have. And then we have this chart right here, the dip finder. I can blow this up. In fact, we could zoom in a little bit there. Right now, it's showing me the 200-day moving average. These are the companies that are doing well over the past 200 days. Booking and Salesforce leading the pack. But if we filter this back to year to date, that's one of the options here. It shows us the performance of each holding year to date. And you can see that on the left here, we have the worst performers. On the right, we have the best performers. The worst performer this year is Vici. It is down 11%. Now, the dip finder just shows market changes, so pricing changes. It doesn't factor in dividends or reinvested dividends. So Vici hasn't done quite as bad as it shows here because Vici's gone down 11%, but it's also paid probably 6% in dividends. So it's probably down around 4% overall this year if you factor in dividends. But regardless, even with the dividends factored in, Vici has been the worst performer this year. Now, if I look left to right, we go into Intuit. Intuit has also been sluggish this year. Now with Intuit, I give a little slack because it had such a good 2023. So it went up a lot last year. It's taking a bit of a breather here, but it's still up around 7%. That's not terrible. Then we get to the third worst performing holding, which is S&P Global, which is only up 13%. S&P Global around halfway through the year was up 20%, but it's come back down because comments that Jerome Powell made. So it has a little bit of sensitivity to what interest rates are doing, but overall this company will continue to compound. And I think it's a good thing when, even looking at my worst performing holdings, the worst of the bunch, they're still making me money. Overall, the only one that I've lost money on, so to speak, this year is Vici. That's 1 out of 12 holdings. That's pretty good overall. So I'm happy overall with the performance and the stock selection here. We have Microsoft at a 20% return, Moody's at a 22, MasterCard at a 25. Now, this is the point where we're outperforming the S&P 500. So the companies on the right side of MasterCard, all of these have outperformed the S&P 500 this year. We have Salesforce up 34%, Apple up 36%, which is a bit surprising to me. I was a little surprised at how well Apple's done this year. I wouldn't have predicted it, but I hold it in the portfolio as a half-size position now, and it continues to do really well. Google's up 38%. That one's not shocking to me. Google is such a great company, and sentiment has been very poor for this company. Booking Holdings is up 46%. This one, when I look at it and I do analysis on it, I just can't get over how many things they have going for them. Booking's such an incredible company. You have Costco up 47% this year, while paying a massive dividend. They paid me $1,500 in dividends, something around that price. And that's because they paid a $16 per share dividend. Just incredible. This company gives you capital appreciation and massive dividends at the same time. Now, Costco is very expensive right now. I'm not buying it, but it has been an incredible performer. Then we have Texas Roadhouse, the best performing company in my portfolio in 2024, up 54%. And this is after a dip. It was up like 70%. This one is after a dip. It's only up 54%. So overall, I'm happy with the performance of these companies, most of which are going up not because of just multiple expansion. It's not just the companies getting more expensive and more expensive. Many of these companies, in fact, most of them, are growing their earnings and free cash flow very fast. S&P Global's growing its free cash flow quickly. Same with Intuit. Same with Microsoft. These are fast-growing companies. Only a couple of them, I think, are growing slowly. Apple's kind of growing slowly right now. This one has gone up in multiple a lot, so that one's a bit more concerning to me. Vinci's growing a little bit slower. I think it's in a harder environment right now, so that one's a little bit more concerning to me. But other than those two, I feel very good about the growth of each of these companies. So overall, I can't complain too much. The passive income portfolio has been making me money for quite a while now. It's performed well over bear cycles and bull markets. I think it's done well overall, and I like the methodology. I like the philosophy. I like what I'm doing with the portfolio. I do think there's some areas that I can improve it, increase the quality and strength of it, and I'm going to be working on that in 2025. Now, moving over to the Story Fund. The Story Fund was originally for companies that were a bit more aggressive. These were ones that have a little bit more assumptions baked into them, a little bit more potential upside. They're not quite as stodgy and conservative of companies. Now, the philosophies have merged together a bit more between the Story Fund and the passive income portfolio. So many of the companies are the same between the two, but I still like having the Story Fund as a different portfolio so that I can track the performance of it against the S&P 500. I said I was going to do that over the 5-year period. I've done that, and it's performed really well. When we look at the overall performance of the Story Fund this year, it is up 50.1%. That's after this recent dip. And this beats out the QQQ and the S&P 500 by a very wide margin. The Story Fund was up 60% last year. When I map out the performance of the Story Fund against the S&P 500, this is what it looks like. The Story Fund is in blue. Right now, the Story Fund has an overall return of 84.73%. The S&P 500's it's 53.65. So 50% against around 80%. The Story Fund is in a significant lead right now. We'd have to have some major drop-offs, which could happen, but we'd have to have some major drop-offs in companies to go back below the S&P 500. This is what the portfolio looks like overall. We've made the most significant gains in Netflix, but we also have Amazon as a major position. Both of these have done incredibly well this year. If we look at the watch list here, we can switch over to the Story Fund. We have it right here. This is what it looks like. This gives you some visualization of which companies have really excelled. When you look at this, the big winner, of course, is Netflix. Netflix is up 95.8%. It's just done incredible. And again, that's after 2023, where it was up a lot in 2023. I can't remember the exact number, but I think it was one of the best performers in the portfolio and in the market last year as well. Amazon is not doing too bad, up 50%. It looks bad compared to Netflix, but this is really good. 50% beats out the QQQ. So Amazon's having an incredible year. It hit my price target of the 220. We have Google, we have Microsoft, and S&P Global here. These ones are still in the green, still doing okay. Now, I've said this before. With the Story Fund, I'm anchoring my entire performance with Netflix and Amazon. I'm making that judgment that I think that it's worth doing. And the reason why is because I believe those are incredibly predictable winners. If they weren't predictable, then I couldn't have such a high level of concentration in those two companies because the outcome would be out of my hands. With Netflix and Amazon, I felt so strongly that each of them had such predictable, foreseeable futures of growth, ways that they can grow their business, that I felt okay kind of all-inning those two companies, putting the majority of capital in them. If you're competing against the S&P 500, a way to outperform is to concentrate into a couple high-quality companies when they're being sold off, especially if they're at really good valuations. So overall, the passive income portfolio is matching the index. I'd love for that one to be beating it as well, but it's just matching it this year. The story fund is deeply outperforming. So netting it out, I think we're doing okay. When I look at this combined, we can look at the total holdings. So these are all the companies across both portfolios, and we can look at them on the year to date. This is what it looks like. Again, Netflix is the big leader, even when you stack it up against both my portfolios. But then we have Texas Roadhouse even beating out Amazon. So Texas Roadhouse has done incredible this year. I don't think it's going to do quite that well next year. We'll see. But that one has just been an incredible growth story and highly deserved. Then we have Amazon. Then we have Costco, then we have Booking, Google, and Apple. It's been a year of mostly tech companies, but also I think restaurant companies have done very well. Texas Roadhouse is not the only one. Companies like Cava have done well. Companies like Chipotle, which I sold after it surged upwards, has done well. Companies like Darden Restaurants and Cheesecake Factory. I've been saying for a while that restaurants are doing really well in today's environment and given a lot of reasons why. So it's not surprising that tech companies and restaurants are doing well this year. On the softer side are companies that are a little bit more interest rate sensitive. We have Moody's and S&P Global. We have Intuit, which again, I give a bit of a disclaimer. This one did super well in 2023, so I'm not too concerned about it. And then Vici, which is a REIT. All the different REITs like Realty Income Corp and Vici have been struggling over the past couple of years. So overall, I like what I see. I think these companies have been performing well, both with their stock price and with their fundamentals. I think they're all very consistent growing companies. And when I get concerned about the fundamentals of a company I own, if I'm really concerned about the moat or the future of it, I'll just sell it and move to another one that I think has a brighter future. So every year you can expect to see maybe 1 to 2 different portfolio changes. I don't plan on radically changing a lot of companies, but I might switch out one company for a different one if I think it's a bit better. Now, of course, looking back in 2024, I also pay attention to the YouTube channel. Now, I'm not some Mr. Beast person that looks at every analytical second of every video. I don't do that. I mostly make content that I think is good content that I would want to watch, stuff that I don't think wastes the viewer's time, and I hope it does well. I don't gauge when there's a little fall off in viewership or anything like that. So I'm not diving through these analytics that frequently in YouTube, but every once in a while, once a year, I like to look in and see how things are going, specifically with just the overall viewership and subscriber growth. And if we look at the main channel here, we'll start off with that one. The main one is just Joseph Carlson. So right now you're on the After Hours channel. This is the main one. If we look at the views, it got 7.5 million views in 2024, which is a 19% increase over 2023, which I think is pretty good. If I'm looking at a business in Qualtrim, I'm looking at any of the KPIs or any of the metrics, 19% growth year over year is generally good. Anything above 10% is decent. 15% is good, 19% above is pretty good. So I'm happy about that. It's not super incredibly fast, explosive growth, but it's decent. Decent compounding growth year over year. Now here's the interesting part. When we get to the watch time, it held consistent year over year. No growth in watch time, which could be concerning, but I'm not concerned about it for a few reasons. So the watch time was 1.2 million minutes, watch time in hours, 1.2 million hours. So we had 1.2 million hours of watch time in 2024, about the same as 2023. Now, there's a couple things that have affected that. First of all, I've released videos far less frequently on the main channel in 2024 than I did in 2023. And the videos are typically a little bit shorter. They're around the 30-minute mark, not 45 and 50 minutes. So it makes sense that there's more views and less watch time. I've made my videos a bit more concise, not usually 45 minutes, they're usually 30 minutes. So there's more people watching them, but they're watching a little bit less long. That would also make sense of why the subscriber growth was so huge. Subscribers were plus 95.4 thousand this year. That's an increase of 67% year over year. So when I look at these three metrics, I think they're generally looking good. The only concerning one is the watch time that was flat year over year, but given the proper context, that does make sense. And when we compare it against the after hours channel, that's where you see some big changes. So we're shifting over from Joseph Carlson to Joseph Carlson after hours. If we look at these numbers, this got even more views, 8.4 million, which is a 78% increase year over year. That's a massive increase. We're getting just shy of doubling the amount of views in the after hours channel year over year. Now the watch time was 1.5 million hours watched, which was an 81% increase year over year. Another massive increase on a year over year basis. And then the subscriber count was plus 56.9 thousand added. That's a 93% increase year over year. Now, why is the after hours channel growing so much faster than the main one? Well, I've just been focusing on it more. I've been putting more content out on the after hours channel, a lot more content, almost 2 to 1. So I think it makes sense with the additional focus. Most of my videos and content are going on that channel, that it's growing faster and getting better viewership now. And that's something that I'm not disappointed in. I'm glad that channel is growing quickly. Overall, I like to see the growth in both YouTube channels. Very healthy, growing organically year over year. I'm not changing my content any. I think it's just reaching more people. Now, another thing that I've been focusing on is Patreon. Specifically, building Patreon to be a monetization mechanism. There's different ways you can monetize a YouTube channel. You can do it through ad reads and affiliate links and sponsorships. Most YouTubers use sponsorships where they read a sponsored reading. You'll see a banner on the bottom of the screen. They'll give you a link to go to or something to go to. And in most cases, they have to plug products that they don't really love. They have to talk about and endorse things that they aren't really in love with. Even if they do love it, it's not their product. They're selling someone else's thing. And I didn't want to have to do that for year after year. I didn't want to have to make deals with other people to sell their stuff, even if I don't really love their products. So I decided to not take on any sponsorships. I've had no sponsorships in 2024. The way that I've chosen to focus my monetization is through Qualtrim, and you buy Qualtrim through the Patreon. So in this case, what I'm doing is saying, I'm not going to plug any sponsorships, so I'm not taking in any of that money. Instead, I'm going to build my own thing, Qualtrim.com. I've built that entirely by myself. I've hired people to do it. I own 100% of it. So no one else even owns 1% of Qualtrim. I have 100% ownership, 100% accountability to it, and control over it. And that's a nice situation to be in because I can build it exactly how I envision it. I don't have to have any disagreement with anyone else. We don't have creative differences. I can just have full control over the project. And I've been able to build Qualtrim with my viewers in mind. Every single feature is built around the type of things we're talking about, the type of things that I think would benefit my viewership the most. So every single feature in this has been directed with that goal. And I think that's made it highly effective. When we look at the Patreon growth, which again is an avenue to signing up for Qualtrim, it's grown substantially. A lot of people have been trying it out. Once they try it out, they fall in love. The value proposition is very good. So you can see substantial growth here. If you can't see the numbers clearly, let me zoom in on this. You can see that in 2023, it had around 3,000 members. Then from 2023 to 2024, it grew to around 5,000, a little over 5,000. Now we're at 8,000. So the growth in the Patreon it's now at 8,065 to be exact. That number can fluctuate because there's always some people leaving and some coming. But over the past year, it's grown 2,900 additional paying members. Now that's a growth rate of 50% year over year. So having this be the main focus and deciding to build my own business where I plug my own product, something I can be proud of instead of just constantly selling someone else's VPN or selling someone else's product that I don't really love deep down inside, but I'm paid to sell it, that's not a fun situation to be in. With Qualtrim, I can genuinely sell something that I truly use and love. Now with Qualtrim, I'm also reinvesting heavily into this. So I take a lot of the revenue out of the Patreon and I reinvest back into it without raising the prices. So I'm trying to build equity and value in Qualtrim without incurring more cost on the customers. The big initiatives that I've done this year, the first one was the KPIs. If you look at different companies, especially the most popular ones, the most viewed ones, they'll have key performance indicators. These are things that we manually track in Qualtrim. meaning we create these charts. We don't have some third-party data provider. So these are taken directly out of the earnings report. They're put into Qualtrim. We have an entire backend system built out to organize these, to update them, to make sure they're accurate. So that was a big goal of ours, to get these KPIs into Qualtrim. So the KPIs are one big investment we made earlier this year. Another one that I made was the earnings calendar. This was a new feature that we built out this year. It's something that I've been looking at over and over again every year. You know, the earnings whisper calendar, where you see the companies laid out in a nice 5-day format. You see their logo. They're organized by before and after market close. The idea is simple, but I wanted it built into Qualtrim. I liked the feature enough that I was willing to make that investment. So we built it ourselves. We added some advanced functionality to it, and we're constantly looking at this and making it better and better. The earnings calendar was another feature that had overwhelmingly positive feedback. The most recent investment that I've made into Qualtrim is introducing AI into it. Artificial intelligence has been around for a couple of years now, and I've been looking at the best ways to implement AI into Qualtrim. And what we decided to do was implement it in 3 different ways. With Google, for example, we made it so that we feed it a bunch of data about earnings reports, about the financials. So we're feeding the AI pages and pages of data. And then we give it a very complex prompt with 20 or so rules to get these type of summaries of information. All summaries aren't the same. Some are much higher quality than others. And what I aimed to do was introduce very high quality summaries in AI. This gives you the advantages of a company, things that are going really well for the company, and risks, or things that aren't going so well. So when you look at Qualtrim Insights, now just below the charts, you can view a nice, concise AI summary that's very well informed. But we also introduced it into the transcript page. We have an AI summary of each earnings report. It's very good. We can see the latest summary here of Nike's earnings that they just had. It goes over their strategic changes, how the CEO is emphasizing a return to the sports as the core of Nike and its operations. So everything about this earnings report, the CEO is focused on making Nike a sports company. They're going to focus on the technology and having partnerships with different popular athletes. On any company now, instead of reading the entire earnings report, you can simply get the latest AI summary of it and get a brief overview of what's going on. The summary is very accurate and hits on all the key parts. And on the earnings calendar, we also introduced AI with the what to watch for feature, which is personally my favorite. It's just incredible. This one actually impressed me more than I thought it would. It was a feature that I thought of that I thought would be really cool when I'm doing those videos of what to watch for in the upcoming week, right? When I go over a busy earnings week and I look at each company, I wanted to introduce an AI feature that could help you do that when you're using Qualtrim. You can look at what to watch for every single company. And this is essentially what it does. It uses all the most recent earnings reports, the most recent financials. We feed that to the AI, and then it constructs all the major points to look at. So this feature is incredibly informative, and it's already updated after Nike's most recent earnings, so it's what to watch for in their next upcoming earnings report. And it goes over all the key points that they talk about. This is all the stuff that the CEO and CFO, the earnings call, the Q&A, all that data that was discussed is distilled down into 5 different points here of what investors should be focused on going into the next report. So all of these new features in Qualtrim take a lot of time, a lot of thought, a lot of testing, going back and forth with my developer, a lot of late nights staying up and looking at the code, looking at test responses, looking at the features and me saying, this isn't right, people aren't gonna like this. There's a lot of effort that goes into making this product as good as possible, but it's been really cool. It's been a fun thing to build out over the past couple of years. And I'm more motivated now than ever to continue to make Qualtrim as good as possible while keeping it at a low price. And the growth of the Patreon has made this more than worth it. I appreciate everyone that has tried this out. It's truly been incredible to see the growth. So overall, through the YouTube channels, through the portfolio, through Patreon and the growth of my own products, things have been going well in 2024. I really can't complain. Not every year are things going to go this well, so I'm prepared if there's a downturn in the market, a downturn in my viewership. I'm prepared if that happens. So I'm not going to be worried about it when eventually something goes in the wrong direction. But right now, things are going really well. So hopefully things are going well with your life, your work, your investments, and hopefully you enjoyed a little bit of an inside look. That's it for this time. See you in the next one.